So we had a lot of good setups coming from yesterday, starting off with Aerc. So an important thing to note about this one is it's a formulating float, and generally when the market switches, the market changes. It's when you have short sellers that just continue to pile on and short into any spike, anything intraday, and it works time after time because the market psychology is going against trying to chase things, trying to hold on for things because everything's dying, and that generally happens when you have a larger float. But then there's that 1, 2 million, 3 million, 4 million share float where if it's trading 20, 30, 40, 50 million, which we see all the time, the shares end up rotating, and all of a sudden you have mostly shorts that are stuck within the float, and you generate new consistent buyers because the overall supply is very small, and then you end up having this outlier move. It shifts the market psychology, and then you have a bunch of intraday runners. Like the momentum still continued today. We had this was just a random, this wasn't real, but all these like sub dollar, I don't know how much NXTP was, but we've been seeing like these sub dollar, around dollar pumps, and they're not tradable. This isn't tradable, but it just shows you what cycle we're currently in. Like people are buying it when it's up 50%, and then it's up 100, 25%, but people are still gonna buy it, and it's not tradable. There's no pattern to this. You can kind of extract some human psychology from this pattern. Like I think this is like really similar to what Jan did the other day, where it sort of died, like literally exactly the same, just different price point. You can't short anything under $2 or even $3 without getting destroyed from transaction fees and borrows. So it's funny, like I guarantee you there's a lot of people that short these around $1, and like you have people that are short OTC stocks that are like at 20 cents, like AABB, back when this was a thing on the daily chart, people were shorting it when it's at like 10 cents, and it's just insane. Like it doesn't, you can say, like people were shorting it this day back in March, or even this day. And it's just terrible. Like you might make money off it, you probably will, if it ends up doing what you think, but it's just not worth it. If it's under $1, it's not worth it. Under $2, it's not worth it. If it's under 50 cents, definitely not worth it. But anyway, onto the patterns today. Yeah, let's go back to Aerc. So that key level was that intraday support from yesterday, right at 9:30ish, and it looked like it was gonna die, right? We also had some resistance here in mid-10s, just open weak, but it ended up holding the day low, slowly grounded higher, and then once you transition from the morning session to the midday afternoon session, if it's holding with low volume and it looks like it might perk and kind of break out, that's when you really have to be suspicious as a short bias trader. And if it doesn't end up breaking out, you have to cut your loss. You have to just get out. If you're a scalper, you can take advantage of this, but I think it's really hard to be a scalper. I think the best mentality to have is just be a short seller, and then when you're wrong, those 2-3 times out of 10, just cut it for a small loss. And then, you had an opportunity to reshort in the afternoon when it broke this key level that acted as support. We see how it, had this failed breakout, tested support and held, and then had this weak push, put in lower highs, and then just completely dumped. So, it's just about that, like, persistence. Like, you might not be right the first time, but as long as you don't just get emotionally attached to it, because I guarantee you, there are traders that will add to this, and then they're going to cut when it breaks out, and then that ends up being the dead top. So just about reassessing your buys, reassessing your position, and then just trading it as it develops throughout the day. But tomorrow, I think the odds of it unwinding are like 95%. At this point, the momentum is completely gone. You have all these bag holders, so any push to the 10s, it's likely a good place to short. If you're just going to randomly short into any spikes, I would risk probably off like this $11 area, but ideally you get a better intraday risk off of like some failed spike. But overall, it was a good setup going in today. It just didn't perform well. Rdbx, kind of the same situation where we're all expecting this to unwind, but it still manages to stay up, and kind of do the same thing we did yesterday, where it breaks the previous day's low, and then they just end up slowly grinding higher. Today out of the open, I had predictable failed momentum, but again, it didn't just completely collapse and finish at $8. It came back in, and now we're looking at another situation where it's entirely possible that this will go another leg higher, because you have people that probably shorted in this $10 range, added today in this $10. Maybe some people are stuck in the 950s. So if I pull a view up here, if this spikes to $10, $10, holds into the afternoon and breaks 1050, like this could go to 12, 13, 14, who knows. So but obviously I think it's more reasonable to be short biased out of the open because of the daily chart resistance, and the fact that we're up 300% and it's a piece of garbage. So we know how this will unfold, but since the market is really hot and since the stock is kind of holding around $9 well, I think we have one more squeeze. But I would be short biased in the morning again, just in case it does end up unwinding and it doesn't hold. But if it does hold, going into 12 o'clock, kind of what Aerc did, I would probably cut my loss and then possibly look to go long for like a breakout if it's the right price action and it's good risk to reward, or just wait for a major squeeze and then try to capitalize on that move, or wait for it to actually crack around this $9 range and then try to short into bounces after it confirms that it's real backside. So it's kind of in a dangerous position, similar to where it was a couple of days ago when it was consolidating around the 6s. This was a little bit different because it was already down so much, and even though it was still up over 100% and we're expecting it to unwind more, it was still in a position in the chart where there's some probability that it could have a squeeze. Now here it's so far extended that a squeeze is less likely, but again, it's still possible. Like just the fact that it broke down from the previous low both times and then managed to squeeze out and finish well, gives me reason to pause. So if it does the same thing, I would probably try to cover into the intraday low, and then if it starts to look strong, consolidate late day, I wouldn't be surprised if it's squeezed out. Just my thoughts on it. So EF OEI, yeah, this was pretty weird. It just had, sometimes you just don't get a tradable pattern. Okay, this is something similar to View, where you have to, for what I'm doing right now, I need to make sure that I'm watching tickers that are holding gains after a big move, after a big volume day. And then when the market heats up, these are the tickers that are going to get chased up 50, 100%. So let's look at View. Well, first of all, the whole context is based around Aerc. Aerc is what ignited the market. We were in a relatively slow condition for a week or two, right? And then we had that big squeezer. So you're going to have sympathy plays for the next couple of days because everybody has FOMO. They miss Aerc. They're going to go and chase something else. Then they see something else being chased, and it just continues on until you have that one where it bags everybody, and the market sentiment goes back to a slow market, and you just get that cycle repeat itself and repeat itself. But this was View. View had that big move, died, but it came back in, and this 170 was key. It broke down, But then, we saw what AERC did. I think it was on the 8th or maybe on the 7th. So once it starts to break this range here in the 190s, you have to be long on that breakout. And these breakouts aren't going to work this well just in any market. It's all about timing. Right after you have that huge squeezer, this is going to happen. It doesn't have to do, anybody can buy a technical breakout. It's just about what's going on in the overall market and what that is going to do to normal psychology. If this market was slow, this breakout would have been trash. But the fact that people have FOMO, they're going to chase it up 60 cents after the original breakout, and it's going to just go parabolic. And we saw the same thing with the ticker I just pulled up, EFOI. Same exact setup. You have that initial move, then it starts to consolidate, and then when it breaks out, everybody's chasing it. Literally the same thing, right? You got that tight consolidation. It's around $1, $2, whatever. That's how I think for long buy traders, it's really about timing the changes in the market, and I think it's best maybe to place like 3 or 4 trades a month in the current market. I don't think, first green days, they don't have any merit, they don't have any real setup, they're just random pumps. But if you are diligent, you just keep these on your watch list, and then you wait for like that 11 o'clock, 12 o'clock consolidation on a previous runner. When the market's getting hot, that's when you can really maximize your accounts. And it's not always going to work out like this, so you need to respect, you need to have your risk on the previous low and respect it. But when they do work out, you can take like a time-based approach and just, let these things rip. But yeah, that's kind of it for, talking about long buy stuff. But HTFC, yeah, so yesterday we saw this thing have a random pump. This weird crack got absorbed and failed. Gap down, didn't have enough range, slowly grinded. I don't know. I don't think this has enough range really to be a good short setup. If it spikes to the 3s, I would expect it to fade back down. But at the same time, it's like it just doesn't. It won't be up enough intraday. Like it closed at 240, so if it spiked to 270, it's up 30 cents. So I don't think this is tradable. If it has another squeeze, then yeah. But I just keep it on my watch list because a ticker like EFOI, where I just want to be aware of it in case something happens. Same thing with EFOI. I had that fail, and then today there's just no volume. No morning spike, no setup. Husa was by far, the best short setup. So yesterday the momentum shifted. You kind of got the indication that's 90% on its backside. Gap down. Didn't have the setup, but then you got that morning spike squeeze action right into the previous resistance levels. Just pretty much a layup, and then closed at the intraday lows. So just classic setup right there. Easy. You start to dabble into it and then add when it starts to fail at that key level. You risk off of 810. You get an average maybe around like 770. Get like 40 cents of risk, and then you cover into the day low / this major support area at like 680. So you risk like 30 cents to make $1. And the odds of it failing based on this price action and the daily chart pretty high. So that's what I like. I like the really high odd setups that are predictable. People call this like first red day, I guess. I don't know. Really, like I'm not really a fan of the first red day type of theory. You see a lot of these figures like go regular, and it's more just about understanding like how these things move, how they react to key levels. To me, everything is just based around bounce short, based around resistance, spiking into resistance, failed momentum. It has a ton of consolidation here. It's just, it's not really, in the long run, this thing is likely to go back down to 5, but at the same time, when you have all this consolidation, it's difficult to trade. Like when you got ARC, which is straight up, normally how these things act is once they break their support, it's just straight down. This one ended up having one more squeeze, but tomorrow this thing is going to go back down to 6. When you have, a leg up, pullback, consolidation, squeeze, fail, random bounce, and then another squeeze, it's like you got short sellers trapped, you got people dip buying, it's just a complete mess. You'll get a predictable move when it, starts, when it's like the first bounce on the backside, but now it's like anything could happen. It could consolidate, chop around this level. I think the best thing to do here is just to wait till it comes back down to like 6, and then when it has a bounce to like 7, short it and cover when it comes back down to like the 6 area. But I don't know, I'm more in a state where I'm just gonna watch this. I think Aerc is the most tradable. Rdbx, yeah, this one's second on the watch. I mean, I'm really expecting this to fail, but at the same time, like I said before, cover into the afternoon if it holds up on the volume. And that's pretty much it. I mean, we had some runners since it's a hot-ish sort of session right now. But, none of these are tradable. They're all sub-dollar pumps. So, I mean, it's a lot different than the past couple of years. Like, you don't have 2 or 3 plays every day. You have 2 or 3 plays every week. But, I mean, it's not as easy, but at the same time, you're still getting a ton of volume. You still have the opportunity. It's not like there's literally nothing. So yeah, I'm just gonna add this to my watch list just to make sure I have some sort of tabs on it in the future in case we get another squeezer, and then this one ends up pulling up, and then this one could be a setup. But it's not likely that it happens, right? But just in case, it doesn't cost me anything to just put it on a watch list. Wow, man, this one, I mean, what a pump on the breakout, and then get a failed breakout, and then everybody sold when it cracked that 20-cent support. Wow. Okay, so like this is a good example maybe of something in the next couple days that if it holds up, since it gapped up, failed, you probably got people that were shorting here in the $3 area, adding in here. I think VWAP, it's kind of a good indication of where people are at. Yeah, so probably average short sellers here in the 290s. This thing starts to consolidate over that level tomorrow, and then starts to show signs of potentially breaking out Monday afternoon. That could be a long setup, but at the same time, actually, when you look at this whole thing, yeah, this was actually a good. I was unaware of this, but this was a decent-ish field, because you have that initial move and then sideways day. It's like a reactive short. You're not expecting it to come all the way back down, but just based on the overall extension, you're expecting a momentary pullback. For tomorrow, I mean, it's just so low priced, and you have support here at 250. If it fails 250, yeah, it could go back down to like 2. Question is, does it have resistance on the daily chart? How much volume did it trade today? Traded 100 million shares, so yeah, I mean, this is a short setup for tomorrow, but if it holds up, then you could potentially get a squeeze going into Monday. So I mean, if I was to rate this on like a 10-point scale, it's probably like a 6 or 7. It's not great. I mean, you're gonna cover at like $2, right? So I mean, depending on what you're risking intraday, like the risk reward is probably going to be 1-to-1 at best. So it's not really a good setup. But if it squeezes to like $4, yeah, then it's okay. So view spikes so much. This could be a potential setup. Again, low priced, but and I'm not really gonna play it tomorrow unless it gaps up to like 5. But once it starts to fail and then it bounces, that's when I get aggressive. But I don't really see a setup on it right now. Yeah, just gonna throw this on the watch list. And the preparation is a lot different depending on what cycle we're in. Like a week ago, there's probably 5 or 6 stocks that are even up like 20%. But since we had the Aerc squeeze, that was epic and went from like $2 to 11. You're gonna get all these sympathies, all this FOMO coming in. So yeah, that's pretty much it.